Hey traders, you know what? Coming up on a brand new trading week, the week of Thanksgiving. It's a week of being able to have not just turkey and stuffing, guys, but it's about being thankful for all the goodness that God has given us. But you know what? Still a trading day. It's still going to be trading. We celebrate Thanksgiving here in the United States, and they celebrate Thanksgiving in Canada. But the rest of the world is trading. So in between those bites of turkey and cranberry sauce, you can still place a trade, and the markets will be moving, even though we might be taking a nap after watching a football game and having some stuffing. So we're going to continue Bulls versus Bears for this week, the weekly Forex forecast, and let's get it started. And I'm going to share my screen, and let's get to it. Share the screen, Greg. All right. Oh, all right. This is a presentation of Elite Traders University. Elite Traders University is where we help men become professional traders in 90 days or less, and using our unique trend scalping approach called Pip and Run. And so if you're interested in it, go to www.elitetradersuniversity.com. Okay. Here's a weekly Forex forecast, Bulls versus Bears. And so excited to be able to share with you what's going on in the currency market, and also indices too as well. Okay. And before we get started, I direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And again, my name is Dr. Greg McLeod. I'm a 28-year, almost 30-year trading veteran. I worked for one of the world's largest forex broker dealers in the world, and I've written many articles, a published author, and I've developed the Pip and Run system. And so I'm here to help you become a professional trader and building an army of traders to drain the banks, guys. The banks have had control, have manipulated the markets, and here I'm going to give you the edge you need. So we're going to look at technicals and fundamentals in the market that we can use. Okay, so we're going to look at the dollar index. We're going to look at some of the currencies, the major currency pairs, and we'll look at the gold, silver, oil, and Bitcoin. We're also going to look at the S&P 500. Okay, but we're going to start the economic news, and I want to start with my favorite tool for decoding the market, a one-stop shop to help minimize and cut through all the garbage out there. It's called My Market Heat Map. You can go to mymarketheatmap.com, and it's not only is a trade scanner that tells you what's hopping, what's popping, what's dropping, and what's not in the market. Green's an uptrend, red's a downtrend, and gray is stay away. But it's also have many other tools. In fact, if you come to the website, right now the market, it's Saturday and the markets are closed. But when the markets are active, we have these will change colors. They start shifting around, and we can tell where the momentum is in the market, and we can follow it on here. So you can get access to one of six powerful heat maps. We have one for commodities, one for indices, one for crypto, one for commodities, and so we can have these active. But you also can use the free economic calendar. Sometimes you got to kickstart it. Just go ahead and just kickstart there, click show, and now you have a full featured economic calendar on the front page, absolutely for free. There are more features on the inside as well, and we'll cover that in the next video on how to use the My Market Heat Map. Okay, so we're going to start. Remember we got the Thanksgiving holiday coming up, but Monday we're going to have IFO Business Climate. And I call it this fun with flags. Okay, now people ask me all the time, Greg, what are the best currency pairs to trade? I go, it all depends on what the market is looking at, right? If you ever watched the movie Trading Places, what were they trading? Well, they traded a bunch of things in the beginning, but the big thing at the end was the frozen concentrated orange juice, the crop report, right? So they weren't going to the gold pit. They weren't going to the oil pit. The news is going to come out about frozen concentrated orange juice, and Eddie Murphy and Dan Aykroyd were focused on that. Okay. Now, guess what? those crop reports or those economic reports that you saw in Trading Places, if you haven't seen the movie, you really should turn on Netflix and you can watch that. It's a great education on the markets if you if you pay attention, right? It's also a funny movie too. Um, Now, so we call this like fun with flags. Basically, you're looking at the, hope I'm sharing the right screen. Make sure I'm sharing. I am sharing screen too. Great. Awesome. So I'll make sure I'm doing that. And this is what's going on here, right? So we look at the flag. I look at the flag and I see this German flag. Germany is in the Eurozone. So I'm going to be trading the euro. Okay. Real simple, right? Don't make this any harder than you need to be. Okay. Look at the colors. That's Germany. Germany's in the Eurozone. At this time, I want to be trading the euro. Okay. I don't want to trade the dollar CAD. The dollar CAD is my favorite, and I want to trade it. No, you can't, right? Because Canada is closed at this time. If it's 4 a.m. Eastern time, what Canadian bank, what Canadian brokerage is open at 4 a.m. Eastern time? Probably not. Okay. So you got to use context. So I keep it really simple. Yeah, there's some numbers here. Previous numbers, 86.5 forecast. I don't want to get you lost in the numbers. All you want to know that there's going to be lots of eyes watching this, and I want to wait a half hour to an hour afterwards to actually place a trade, because that's where the feeding frenzy is going to happen. That's where all the prawns are going to circle around the euro at this time. And that way you are in the market where there's volume. Okay. There's no centralized volume in the Forex because the centralized volume comes from an exchange like the NASDAQ or the New York Stock Exchange. They have a centralized exchange. There's no centralized exchange in the Forex, and banks don't share information. So the volume stuff that you see on your charts probably doesn't mean crap, right? So I look at the euro. So the euro is going to be in play, and we'll look at the euro. And also Tuesday, November 26th, we're going to have consumer confidence and FOMC minutes. And usually, if I'm trading if I look at the United States flag, right? I have some choices. I can trade dollar yen or I can trade dollar CAD. But I also trade the euro because the euro is called the anti-dollar. So I might be, Monday, Tuesday, I'm probably all euro. The euro's been in a downtrend. So I might just look for ways to get short the euro. Okay. But we'll take a look at the technicals and see how they match up. But later on, let's say, hey, I'm at work, or you're not up in the morning, and the afternoon or the evening. We've got 19:30. That's 7:30 Eastern time. We're gonna have some Australian data coming out. There's an Australian flag, right? There's New Zealand flag, and then you have a Reserve Bank of New Zealand press conference. So we got these flags here. It tells you what to trade. So in the evening, people say, well, what do we trade in the evening? Well, look at the flag. The activity is going to be in the Australian dollar, New Zealand dollar. That's going to be active on Tuesday. So, and it's been very easy market to trade. These markets have been in a downtrend versus the U.S. dollar. U.S. dollar has been on a tear. U.S. dollar has been matching up, just beating down other currencies except for Bitcoin, and gold is has rallied. And then on Wednesday, there you go. There's the euro again with German GfK consumer confidence. It's negative. It's probably going to be remaining negative. Consumers are, Germany is having some political problems, economic problems. And so, the euro has been weakening. But Wednesday at 8:30, you're going to have initial jobless claims, personal income, personal spending. Again, I'll be looking at the dollar yen or the euro to trade there. And you can see the numbers, they look like they're not going to fluctuate that much going into the holiday. And then we have the inflation rate year on year, a very important number. Looks like the Eurozone has been trying to get toward that 2% inflation target, which looks like they've reached. So there's no reason to hike interest rates to boost, and that would boost or cause the euro to rally. And so we might even see a continuation of downtrend in the euro. Okay, but we'll check the technicals, right? Now we move into Thursday. You're going to have that's the inflation data. That's going to be on the 28th, which is Thanksgiving. Okay, so maybe you want to spend time with family and friends and watching football games and eating food. And then I think maybe sometimes brokerages do have special Thanksgiving hours. But I think one Thanksgiving is like, okay, family, they start, doing their thing, and maybe someone acts a little weird, like, I think I'm gonna step outside. I got my laptop, go up to the, get their Wi-Fi code and make some money, right? Instead of being in uncomfortable situations, right? So anyway, so Thursday, and so the market is going to be going. So maybe the U.S. stock, if you're trading U.S. stocks, the market's going to be closed, of course, right? And then, but the European markets and the Asian markets are going to be open. Um, but with the U.S. offline, be careful because usually the spreads get wider. Why? Because there's not that many people in the market. Lots of people in the market creates tighter spreads. Not that many people in the market creates wider spreads. That could create very sharp moves in the currency for during the holiday period. Sometimes you can catch those moves in that, and it's very active. Sometimes it's just dead and it doesn't move. So just be very careful. Maybe you want to lower your position size. Keep your stops closer. You keep your friends close and your stops closer, right? Uh, and then we go on to Friday. We've got lots of Friday. You're gonna have your Black Friday sales and things like that. If you're not standing in line, you know, waiting for the doorbuster sales to open, sit in front of your computer and make a couple of bucks, right? You have Japanese consumer confidence coming out at midnight. And then here we got the French flag, so more European data coming out as well. GDP inflation growth coming out there. And then you have some Swiss data coming out at 3 a.m. I haven't traded the Swiss franc in a while. Could be kind of interesting. Growth rate expected to drop from 1.8% to 1.1. That could put a boost to the dollar Swiss. We can actually take a look at a chart. And then 5 a.m. flat with inflation rate out of Italy, also the Eurozone. Then the Eurozone altogether, we have CPI, flash CPI. Inflation is supposed to drop from 127.3 to 126.6. And inflation rate is supposed to drop from 0.3 to negative 0.3, which could even make the euro short might be a really, really interesting play. Inflation rate year on year. Again, this is not a recommendation. These are just ideas that I have. And then core inflation rate year on year is supposed to rise from 2.7 to 3. Right. Don't know how India growth rate came in here, but at 8:30 we're gonna have lots of Canadian data. Canada GDP month on month and some other stuff there. So look, there's a maple leaf. So what we're gonna be trading? Oh, I want to trade Turkish lira, Norwegian kroner or something. It's like, no, the flag says Canada. So you're gonna look at the Canadian dollar or CAD yen, CAD Swiss, Aussie CAD. You have lots of options within the CAD complex, right? Again, when the news comes out at 8:30, you want to wait 30 minutes to an hour to enter the market, right? Don't try to jump in at 8:30 thinking you see something. You're gonna get chopped up. You're gonna get these Darth Maul candles. Darth Maul had the lightsaber with the two line. You're gonna get that kind of thing going on, right? So you want to make sure that that you are that you wait till after the chop, after the initial announcements made. You want to wait, sit in your hands, take your hands off the mouse, put your hands on your head, step away from the keyboard, and wait. Wait 30 minutes to an hour. And then what will happen is it'll clear up. It'll be so clear to trade, and it won't be a guessing thing. I don't like puzzles. I don't like escape rooms. I don't like crossword puzzles. I don't figure anything out. I want to make it super easy. If I want to go play chess or do something like that, I do my figuring stuff out outside of money making. My money making is stupid simple. Green, I got green and red, and I count to 5. I know my ABCs. I keep it very simple, right? I get people so mad, so complicated. Oh, it's supposed to be this, it's supposed to be that, blah, 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 blah. Like, I, and what does that have to do with making money? I'm very direct when it comes to making money. I'm very clear, okay? I want to cut through the noise. And you turn on the business news or blah, 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 blah. No, give me, where's the momentum change? Where are the bulls? Where are the bears? And let me get in and get out. And I'm done. 10, 15 minutes, I'm out and I've turned it off, right? I'm not trying to, create some type of, I guess I could create a podcast and talk aimlessly about it, but, that's not going to make you any money, right? You want something that makes you money or you want to talk, right? You got Joe Rogan for that. You want to make a friend? Talk to Joe Rogan. You want to make some money? Talk to me, all right? Now you have this one announcement back here. You go, it's from China. That's a Chinese flag, okay? And you go, well, Greg, we don't trade China, so we can ignore that, right? Wrong, okay? Um, China is a big trading partner with two countries, New Zealand and Australia. And usually when you have some Australian data or Chinese data, if China is having problems, usually Australia is having problems too, right? If the Chinese economy catches the cold, then Australia is going to catch COVID. It's just that. It's like, see, some people, they have a cold. Oh, they got a little cold, and then you get it. It's like, oh my God, it's like, it's like the flu. So that's how China is in relationship with its neighbors. And we can trade their neighbors. We can trade New Zealand. We can trade this. Okay. So now we've got a list, a hot list of currencies that we can trade based on the economic calendar. Okay. Now you can do anything you want, but this is what I do and what my students do at Elite Traders University. If Pip and Run using our proprietary system. If you're interested in finding out more on how you can work with me, then click the link in the description to set a free profit acceleration call. Book a call with me or a member of my team, and I can show you what we do. I'll even show you the game plan. You can either take the game plan, how it works, and put it in your own trading. It might take you 6 months to a year to implement, but you'll make money, right? But if you want my help, you'll probably get done faster, probably like 90 days or so. I mean, usually guys, they come in, they say, oh, it's like this. I go, yeah, just like this. I'm like, think of me as Morpheus and you're Neo, and I'm offering you the red pill, and you keep taking the blue pill, right? And falling asleep, and I'm trying to wake you guys up. But, maybe you want to keep DIYing it. And I've seen guys, they go in young, right? They come out old, and they still haven't made any money, right? And I think maybe at this time that the pain is bad enough and this is something that you got to do. Forex is not an option anymore. It's not, oh, this is a great little hobby, little side hustle. No, it's like your job is downsizing. AI is coming after you. Bots are after you. They don't want to pay older workers. They have a price in your head because they can hire 5 young people, 5 20-year-olds, 23-year-old for the price of you. And you have a ticking. I had the same thing happen to me. I was at the brokerage. I was in my 40s or no, the 50s, early 50s, and everyone around me was in their 30s, right? I could out trade them, but I was a 6-figure salary, so they seem to put a lot of pressure. If you let me know in the chat box if you know what I'm talking about, right? They put pressure on older people. You have a target on you because they figure that their health, their group health insurance goes up when they have older people because you have heart disease or obesity or other little these conditions that drive up the cost of health care for everyone else. So guess what? They find a way to push you out and not have to pay your pension or whatever. And so Forex trading, and if you're in your 50s, like, oh yeah, I'm gonna go get. It's like we're gonna work at Chick-fil-A as the manager or something like that, you know. And you need to, and you got kids, they're in college, you got a wife, and she's high maintenance, and she doesn't know what's going on. It's just you, bro. There's no support for you men, for us men. And I'm a man too, right? There's no support for you. You get booted on the street. There's no shelter for you. There's 10 women shelters. Oh, we've got stuff for women, and we got to help them out. But how about the man, right? The man got booted from his job, and there is no support for you. So that's why you have to make this trading work. So you can take control of your financial security and actually make a difference, get your self-respect back, okay? Make up for all the money that you lost and all the stuff you got scammed out, all the promises you broke to your kids and to your wife because, hey, I'm going to do this Forex thing and I'm going to be rich and everything's going to be great. And it hasn't worked out, right? But you have something in your heart believes that it can work if you find the right thing. Well, you've probably found the right place. The only way to find out is to click the link in the description and we'll talk. Anyway, I deviate. I get off my soapbox and let's get into the charts, right? There's something more cheerful here. And let's go right here. Okay. But it is cheerful because you have hope. High hope. We have high hopes. We have pineapple sky in the DXY. We're gonna start with DXY. Let's start with DXY. Why? Why ask why? Why ask why? Right? We're going to start with the big monthly chart of the DXY. I like to start from a 50,000 foot view using multiple time frame analysis. In multiple time frame analysis, yeah, here we go. And we can see that the dollar index, this is a monthly chart, dollar index going back to 1999. 2000 party's over, out of sight. Dun, 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 dun. There we go. Higher highs, higher lows. We have a breakout above consolidation and a pullback. Baby, this thing is heading north. The dollar is on track to hit new highs. Higher highs and higher lows. But guess what? Bitcoin is not falling for the dollar's stuff anymore. That's the Bitcoin is beating out the dollar. We'll talk about that. But the dollar index is the key. If you understand where the US dollar is going to go, you understand where all these other currencies are going. You can see higher highs and higher lows. We also can take a look at the 10-year Treasury note. The interest rates are going up. There's just a lot of bullishness. There's lots of positivity, money coming into the U.S. From other countries because hey, other countries, their economies kind of suck, and so there's a new hope in America. There was like a new morning in America. I remember when Reagan became president, and it was we had this something called the New Hope in America. So we've got a couple of things. We've got nice bit of support there, strong support at the 100 whole number, round number area. And you can see that we have this huge momentum spike, a pullback to support, a multiple bottom, double bottom, triple bottom, quadruple bottom. Anyway, this 100 level was like rock solid like a rock. Right, let's walk it down to a weekly chart, and you can see total acceleration, a break above some previous highs. We have a close above a previous high of the May, right in the 107 area. And this was a gap. Prices just dropped straight down vertically like that. We have something called in our language, we have our own like jargon at Elite Traders University. It's the rule of symmetry, right? What happens on one side of the equation, you have on the other. We can see price drop sharply here from the bottom to the top, like a Drake, right? We got this drop, right? So we look for an equivalent move back up, right? The rule of symmetry is like the Valentine's heart that you make for your mom in elementary school, and you didn't draw the whole heart. You really drew half, and then you cut it and you unfold it, right? So this is your Valentine's heart, and here's the usually in time you can measure from time, the measurement of time from the middle axis to the actual drop, the equivalent in time, and we can see we going back up to the 112 or even 114. The old high, which is about 700 pips away. So this is extremely bullish, right? right? Because it's the US guys, USA, right? That's what's going on. Dixie's on fire, and so we walk it down maybe to a daily chart, right? Just tremendous higher highs and higher lows. We can maybe zoom in on this so you can maybe see this a little bit clearer. That this is a very strong uptrend. We don't want to try to short. I mean, the pullbacks have been shallow and very strong bullish action, right? Especially since October we bottomed out, and this is counter seasonal because usually the dollar weakens going into the holidays. But this is a true phenomenon because we've had an election, and election markets behave a little bit differently, right? So we see the dollar on the rise, and we go down to a 4-hour, and we can see just a tremendous rise, right? Okay, let's switch gears here. So again, we're bullish on the dollar. Let's go to the euro, and we can see it's just the opposite, right? Starting with the monthly chart, and you can see we're in this month. This is the month of November. Just one big slide from the 109 area all the way down to a low of 103.33. And we had some buyers stepped in and pushed this back up to 106, right? So, and we have an old low that's threatened to be tested 95.39. And I think we can get there, 95.39, because this is the anti-dollar. So what happened on the dollar side to the north back to a 112? Well, this was 112 in the DXY, right? So we get there, we're looking for a continual move. So, if you guys are in prop challenges, this is my pro tip to you. If you're in prop challenges, put on like a small lot size, like a 0.1 or a point, maybe 0.2, and get a short on the euro and let it run and just leave it. And you'll probably pass your challenge probably in a couple of weeks as this continues to work its way down. Don't get cute. Just trade the trend. The euro is in some serious trouble. There's some structural issues. Germany is the largest economy in Europe, and they're facing all kinds of problems. You have a new prime minister in England, and they're having problems. They're not part of the Eurozone anymore. France has some destabilization. They got that war right next door. Possible chance of World War III with these long-range rocket launches from the Ukraine. So we've got a number of things that are challenging Europe. It's going to be wintertime. They're going to need gas, natural gas and oil. Russia probably won't want to give them any or sell them any, or they might even turn off everything and let them freeze, right? So Europe is in trouble. And so we have a double top, and the markets play out geopolitical things, and we can see this continuation. So let's go down to the weekly chart, and you can see just an avalanche, just like double top avalanche. And you can see the rule of symmetry here, where we got a nice sharp move to the upside, right? Symmetry. And then we look for an equal move to the south side, right? Not the south side of Chicago, just south, just bearish, right? So bulls versus bears. Sell. Yeah. So let's walk it down to a daily, and we can see a little bit of a rally and just drop, right? We sell the rallies. That's what we want to do, sell the rallies. So I'm bearish the euro. And it's going to be the same way. Any currency that has USD in the back, it's going to be a bloodbath. Pound dollar is going to be the same way. GBP, USD, MOUSE, right? Just tremendous to sell off. So, you can look at it's going to be the identical play out there. In fact, we might even have a bigger correction because this was our King Charles coronation after the Queen died, and we had the Prince, the King Charles, not Prince Charles anymore. He's King, the King Charles effect, right? So we rallied from that, and then we topped out A, B, C, an ABC correction against the trend, And now we're seeing maybe a new 1 down, 2 up, and maybe 3 later, back down to retest the 103.27 area, the low of September, where the queen died. So we actually maybe see a retest of that area, might see a break of the trend line, which we already have seen. A sharp move like that usually gets to some type of retrace. We really haven't seen any type of retrace at all. We could just drop out into the we've got a little maybe support line there. We're currently at one spot 254.8 or 39, and we probably get down to 36, and then we have other support coming in right here. All this old support becomes, or old resistance become new support. We have this area here. That's the 120.98 area, about 250 pips away. And so every rally, this is like in a very strong downtrend. So again, bears.
Sell.
Right. Yeah. So this is really looking bearish, right? So anything. So Aussie dollar, Euro dollar, pound dollar, Kiwi dollar. So let's switch it around. Let's switch it up, right? We got see dollar CAD. Dollars in control, and we can see higher highs and higher lows. The bullish on dollar CAD, and we can walk that down from the monthly down to the weekly. And also we're breaking up previous resistance that we had back in August. We had a high of 1.3950, and we've closed above that, and so we can see a run back up to this old high of like 148, right? That was the high of 2020, old pandemic high, 316, old pandemic high. So we can see the move back there. Let's go to a daily chart. Oh, and we got a nice pullback. Look, price broke out, came back to retest. I call it return to the scene of the crime. We have price breaking out, return to the scene of the crime. That's a nice bounce. I would be bullish. Yeah, I would look to that.
Buy.
Yeah, we'll look at that. It'll be nice uptrend in the rising trend. See if we can get back to we're currently at 139. Look at 140, 102. Look at the old high to be retested. Okay. Probably just to make things go a bit faster. Let's look at dollar yen. And then dollar yen. Oh, let me remove some of all that stuff and move all drawing. Let's go back to that monthly chart. And you can see after the drop, right? We're resuming. This is a massive uptrend. This is huge. Remember, the Bank of Japan, they still want to have a weaker currency because it allows you to buy more of the Sony PlayStations and Lexuses and other, components and things that they sell, chips and things like that. So having a weak currency is good for their economy. And we saw when they raised rates a little bit, and so all it was a pullback, an ABC pullback against the trend, and now we're resuming. We got a bounce from the low of 39.55 or so we had back on September 2nd, 2024. And so we're bouncing back up. And every time, hey, look, everything replays itself. We had a bounce and a retest of the high, a bounce and a retest of the high, and a bounce. And so, I call it sunset, sunrise. The sun has set, the sun has rise. And it's so funny because, Japan has the flag, the rising sun, right? So we look at price moving back up toward those old highs at 162.03, revisiting that. And so much ends for the rate increases for the Japanese currency. And I'm trying to find the arrow. They move the arrow, right? So we're looking for this stuff will move here. So we're looking at I'm bullish the dollar yen. Look at that nice, just all solid green, guys. It's just Now you go to a smaller time frame, you see nice little pullbacks, right? And I think we've got maybe a little bit of I'm using Hakanashi candlesticks. This is what we use in our system. Our specialized system uses really great buy and sells in the direction of the trend. Again, you can click the link in the description to find out more about that. Okay, so dollar yen and then dollar Swiss. We have some Swiss news, and dollar Swiss should be good. Um, and it's gonna be hard. This is it's very interesting here, right? Because we got nice monthly double bottom. It's we don't see that often. It's pretty rare, right? So we had a test here back in January 2024, and a retest of that area again in September 2024. And now we've got a takeoff, right? Typical double bottom target is the 92.27 area. So we could see a test of that area. Price has a memory. So it remembers that old high. That is probably my first TP target. If I were a swing trader, position trader, I'd be scalping this, in the direction of this trend. Allow this, like Uncle Cut says, one of my students, cut the rope. He says, we've got the recipe. We put it in the oven, let the oven do the work. Well, the trend is the oven, and we're gonna let the oven work, right? Now there's probably some counter trend. I mean, it's just that's how you find the strongest trends, guys. Look at that, right? Little pullbacks, flat corrections against the trend. This is a flat correction or a high and tight bull flag where price, here we go, it rallied and then it made instead of pulling down to a Fibonacci area like a 38 or a 618 or 50% retracement, it was like a flat 11% correction. And that tells you that they are not waiting for a pullback. They're not waiting for the 38% retracement, right? They're getting at 23% and buying this baby off of 23 and boom, right? And then look, we got a breakout above a new high, pulled back, trend is still up. So, we're definitely bullish. We're bulls versus bears. The bulls are in full control of the dollar Swiss, okay? Now, I'm going to jump to gold because gold has made a big comeback. It has taken a little bit of hiatus, but you look at this trend, and I wrote in my book, the Gold Rush Blueprint, and I talked about it. I said we could hit that 3,000 area, and I wrote it back over here in October when we were talking about it. We were in this kind of a bull flag, and we're dropping, and we got that last push down to 1617. That was like a jumping off of a springboard, like a swimming pool diver. Boom, and higher low, higher high, break, and then boom, breakout, right? And I know a lot of people are trying to like pick the top on this, but higher gold is probably here to stay. Why? Because the US every 100 days, the deficit is going up by $1 trillion. Hopefully, the Doge Committee or the Department of Governmental Efficiency will come in there and start slashing stuff and reducing costs, and maybe that might help curtail the deficit. But until they get control of the deficit, other assets are going to increase, knowing that anytime we could see the promissory notes come come calling, the debt collector comes calling. So here's the weekly chart, and like I said, we had that pullback. I think it's just a temporary pullback. An overall trend, it was roughly 3 weeks of decline, right? And maybe after a 3-week decline, we saw long wicks. Buyers stepped in at these levels, and we could probably see our next week a green candle, and we could see a move higher. And we see our daily chart already got a bounce, and we bounced off a low of 25.31, and now we're at 2007.16. So that's a $200 jump in just a few days, right? And so we're still regaining that, looking for a move back to the old high, and that 27.90, right? And so people who got short and they're getting stopped out, they're like, oh, what am I going to do? Oh, buy, right? So bulls versus bears. I'm bullish on gold, right?
Bye, bye, bye.
Yeah. Here we go. And then it's like,
All aboard.
yeah, this the train's leaving the station right now, guys. All right. Now I'm actually going to change. Let's see if we got going on here. Let's go to YS. Right? No, YM. Let's go to the Dow Mini Futures there. Let's take a look there. Start off that monthly chart. Walk it down. And you can see. Look at this. The Dow has been on a tear. This is the very strong bullish trend. The weekly chart. Higher highs and higher lows. No reason to sell. And we can have it's no. You can counter trend and sell, but the train's leaving the station, and usually we break to a new high or retest the old high, 44,631, and that's about 500 points away from where we are right now. On the daily chart, 4-hour chart, you can see the train is leaving the station, and we have maybe see a move back up to right there to the 44,666. And so the train is leaving the station, have left the station. A nice bounce off the 200 simple moving average. And we're bullish, right? We usually take a little pause at the old high. That's why 52-week highs and old highs are very important in trading, because that area was somebody got long here and they've got a sell limit. Saying, oh, please, if this price will ever come back, I want to get out of the market. You got all those guys with sell orders, right? And that's what causes prices to fall, right? So that's where your supply and demand zones come in, right? Just looking at the old area right there that comes in. But price could just bust through that too, right? So I wouldn't take shorts, but this is, remember, this is a 4-hour chart. I'm sure there's lots of action that we could do. 4-hour chart. Yeah. 2-hour chart. Yeah. There may be limited upside, right? Because we're approaching an old high, but there's still a little bit of room there, right? And I would want price to break and come back and test, right? So that remember, we're coming up on the holiday too. So a lot of guys are probably going to be taking off that wet Wednesday. They might just the B team takes over and the A team goes on holiday, and they said, don't do anything stupid, don't push prices too high, stay within this range. And you're sitting there, I'm off from work, I'm gonna trade, and nothing's gonna happen, right? Because the A team has gone home for the holidays. You are not gonna find anything. Okay. Anyway, S&P 500, let's take a look at there. Monthly chart, just one big green candle straight up. Look at that. It looks like the that tower in Dubai, the Al Khalifa or something like that. It's like just boom, right? And you can, so it's very strong, right? There's buyers, lots of enthusiasm about the election. And here is our weekly chart, higher highs and higher lows. Yeah. 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 You got trade what you see, and this uptrend, right? So buying, you can be counter trend, whatever not, but you're like running in front, running out in the middle of traffic to grab $1, and then you end up as roadkill, right? You see like that squirrel, that possum. He's got that Michelin mark across his back. That's you trying to grab money out of this market on the counter trend. Why? Because you don't focus. Your phone will ring, your wife comes in, your dog comes in, your kid wants you to read him a story. So consequently, you lose focus, or you're trying to watch some Netflix thing, or you're watching a sporting event, or you're trying to do something else. And the moment you look away from the chart on the counter trend, it goes back in trend. And one moment you're in the profit zone, and the next minute you're losing. But if you trade in the direction of the trend, guess what? You can make a stupid entry and the trend will bail you out, right? So let's say I bought here. Oh, I bought. I mean, you're gonna have to have a stop, right? You run out of capital, right? But let's say if I bought a stock, if it went down, I'm in line with the trend will bail me out, right? But if I try to short, yeah, I made some money, I look away, it snaps back, it ain't ever coming back. Your account is blown unless you have a stop, right? So, this is like running in front of traffic. And, I have strategies for doing that. I just don't have time to just sit in front of the computer, like that. I'd rather like scalp in the direction of the trend and let that trend like take me up and make money. Put it in the oven, let the oven do the work. Right. So this daily chart of the ES, S&P 500, ES, nice pullback against the trend. And now we've got, a nice little trade back to the upside, right? Old high here at 6,050. Can you believe we're at 6,000? I remember we were at 4,000. And people, it's going to go down because the markets are going to crash. It's like, no, they're not. Don't fight the Fed. The Fed has cut interest rates. It takes 6 months for interest rates to actually hit the market. Okay, the lift that we're seeing is a result of emotion, but the actual mechanics of money flow have not even hit yet. Okay, so somebody goes, "Oh, I'm going to short the market." It's like, don't fight the Fed. Okay, I remember trying to fight the Fed back in 2001 and lost my shirt trying to do that. Right? Like, oh yeah, it's a formula, double top formation. It's like Bernanke has like cut the interest rates. When they cut interest rates, guys, it's real simple. When they lower interest rates, there's cheap money. That money is not worth as much. So they take that cheap money, and what do? You buy assets, you buy stocks, you buy high-yielding currencies, you buy property. That's why the property goes up in value, and houses, and and cars and food. Everything goes up because people have these dollars, which are there's too many of them, and they're not worth anything because they're printing more. When they lower interest rates, they're printing more money. So when they increase the money supply, that money has to go somewhere because it's losing value. The value has dropped. So they pop it in here and it goes up, right? So as even the dollar is going down in value, but your assets, they're throwing into Bitcoin, right? Imagine you had $60,000 Bitcoin and now it's like $98,000, $30,000. After a while, people are going to be like, why do I need to trade anything else? I can just throw everything in Bitcoin. Just a thought, right? Yes, let's walk it down. 4-hour chart. Nice. The train's leaving the station.
All aboard!
And we got we're at 5,991. We've got a couple of hundred points of a possible upside there. 2-hour chart. You just gotta wait for your pullback. You gotta wait for your trade, right? You go down to 15-minute, and just wait for that pullback and then be able to follow that market, right? So I am bullish. Yes. Okay. Let's look at NQ, baby. The NASDAQ. The NASDAQ. All right. Let's go to that monthly chart. Long wicks. Woo. This was where price the high 21,341, but it closed 20,567. So that's a big decline, right? A big pullback. Long wicks, can be bearish, but where the trend is up, guys. The slope is up. The structure is up, higher highs and higher lows. So we're looking for buys on the NASDAQ based on the trend. The higher time frame trend says it wants to go higher. And an object in motion tends to remain in motion. The physics stuff, I know I had some physics guy. Well, no, it's not. Like, be quiet. It's all energy. It's all momentum. Momentum, energy. since there's no other resistance areas here because NASDAQ has never traded this high before, then the sky is the limit, right? We can go super high because we haven't our last bit of resistance, old resistance becomes new support. Our new support is at 16,727. Now that's 5,000 points away, right? So let's walk this down. Weekly chart. And you can see we do get corrections and they're tradable, but heaven forbid you go to the doctor, you go on vacation, you get called to a special project, and you turn around and your short turns into you're short on money, right? So it's kind of better to wait for a pullback in the direction. You want to buy the dips, right? I know it's a weekly chart, but Greg, it's a weekly chart. Okay, we'll just step it back. Step it back. You can see the dips, right? 4-hour chart, right? I'm bullish, right? But I want to buy weakness. I want to buy the worst house in the best neighborhood. We're flipping. It's all flipping, guys. You want to find the strongest neighborhood or the highest neighborhood, the most prestigious neighborhood, and find the shackiest house because it's going to be cheap, right? It's going to be undervalued. It needs paint. It needs grass trim. It needs that car get out of the front yard. It needs the new roof. But guess what? A new roof and landscaping is a lot cheaper than buying a full valued house. A $700,000 house in a $700,000 neighborhood. You're not going to make any money, right? So buying old highs is not going to help you. But when you have your short-term chart showing you a dip and an overall trend that's roaring up, this is cheap, right? We'll buy value. This is the value zone. So we're buying value and we're selling premium, right? And so we had some value areas here, and now price is moving up, and usually price will return back to the scene of the crime, right? I mean, you can take Fibonacci. There's all kinds of things we teach at Pip and Run, slice it and dice it a number of ways, right? We have a 100% expansion at 21,752. The old high would be my target because we're coming up on a holiday, a shortened trading week, right? An abbreviated week, on Friday. And the market will be closed Thursday. So I just be careful that this is probably your profit zone. We start getting up in here. I just shut it down, eat some turkey, watch a football game, go Raiders, and then come back on Monday, right? Let's see. So let's take a look at BTC USD, right? And let's look at Kraken, right? So here's we're gonna walk it down the same way. Oh yeah, and I was bullish on in Q, right? But again, okay. So here is our look at that, right? Look at those dips. Buy the dip, right? We got down to 48,874, and now we got up to 99,799. Not even only give you 100, right? But it pulled back, hit 99. We pull back to wow, we're at 83. Wait a minute. Crypto. No, 98. I don't know what's up with you. Oh, let me move weekly. Oh, okay. That was like a glitch. It's like what, 83,000? I know. Look at that. But it's an uptrend. Higher highs, higher lows, and we have an accelerated move. This accelerated, we have this thing has gone vertical, right? We went from nice little 45-degree kind of thing right there. And then now it's 90 degrees straight up. Walk it down to a daily chart. If you're enjoying this, say, hey, give me 5. Give me triple 5, triple nickels. My uncle was a paratrooper in the triple nickels, 5. Okay, here we go. Higher highs, higher lows, daily chart. So we're no. One of my students actually took it short, and he made like 5% on the short side. But you're running in front. Yeah, he took that. He took this down. I'm like, going, that is not a whole lot of down right there. But but he did it. I'm like going, okay, Daredevil. You end up as roadkill, right? But look, nice little pullback as a trend. I'll look at a retest of the 99,642. Bitcoin, I am bullish, and
All aboard!
this train has a lot of legs, right? A lot of legs, right? In a 1 hour chart. But I think we get to 150,000 by spring, right? We might base out a little bit here. It ran up, double top, pull back. Yeah, but I think we retest the high and maybe like 105 or so. But I'm bullish. I'm bullish. In fact, I've been scalping. I've been scalping Bitcoin. And I haven't really because it gets caught in these little sideways areas and just not a lot. But it's really interesting because you can trade it on the weekend. It's probably moving now, right? Um, but yeah, it moves very. I mean, at this level, it moves like pretty beautiful, right? I think I hit it. I hit it so many times. I like hit it. Yeah, I just hit it. I go, man, it's like free money, right? Because you're in that, you're in this little area here was just like, nice big piece of meat right there. Yeah, so this is like chicken bones, it starts moving sideways, like sucking on gristle. But this is gonna give you that nice meaty move, big old slice of turkey. Man, I'm hungry now. But yeah, that's definitely bullish on that, right? We took a look at gold. Oil has had a little geopolitical premium here, because Ukraine says, you know what, we are not listening to anybody. We're going to hit those Russian oil supplies and start World War III. And we've seen oil rise, but I think um, oil is going to drop probably back down to the negative area because you're going to have drill, baby, drill. You're going to have the fracking, the Department of the Interior. Used to work for an oil company or fracking company, so it's going to be wide open overproduction, and that's what happened here. We had that overproduction, and we had the oil dropping down to zero, right, below zero, right. So actually charging people money to store oil. So I think we roll over, we break this 63 area, we drop. China is their economy is slowing, their population is dropping, and so they have a population time bomb, which means they're not, and their economy is slow, so they're not producing or not consuming that much oil. So there's a glut, a global glut, and we've just got a little bit of a let's they call it a geopolitical premium. Um, and we might, I mean, it's a lot of support here, so we may get, if Ukraine hits Russia, we could see a move maybe higher, right? We might even spike. We could spike up. We could spike and create a double top at this area, right? But I think it'll be short lived. I think we double top and then we come back into range and drop back down to here. I think we might do some type of an A, B, C up, right? Unless this is our ABC or this is one choppy too. I would look at a break below 63.81 could take us all the way back down to zero, right? And there was a kid that he traded from, I think he took $200, he turned it to $200,000 getting long oil, right? Well, we're setting up again for another big move in oil. And so we could see a retest of that low, right? And, with China, they've got something, they have this death cross in the population due to their one-child policy. And so they have a population time bomb because they need to replace, right? China's population decline is irreversible. So their birth rate and the death rate, look at it. Does this like a chart that, lower swing highs and lower swing lows? And this is like a moving average crossover, the death rate and the birth rate crossing, right? Where the birth rate declines and the death rate starts to increase. They're saying that we could see like biblical proportion declines in the Chinese population, from like at 1.2 billion to maybe like 800,000 or 800 million. That's a lot. It's like 400 million people disappearing because of age. They have an aging population. And so this death rate will take off. It will go exponential. And that birth rate, no one's, people prefer to have boy kids instead of girl kids. So the guys don't have anyone to reproduce with, right? So now you have this population decline, which means that the demand for resources and things is going to decrease. And so you're going to see, you can see massive deflation as, competition for raw goods and materials and things. China won't need them. You don't have any people, you don't need any resources, right? So I know it's kind of a sad thing, but I wrote about this in 2013. But the publisher who I worked with said, "Oh no, Greg, you don't know what you're talking about." I go, "Oh, okay." It's called Meltdown of China. The guy goes, "I've been to China." I say, "Yeah, okay, no worries." Anyway, so yeah, the similar thing happened in Japan. You probably don't, guys, if you're not old enough to remember, Japan, they owned all of our debt, they owned all of our property, they owned all of our movies and everything. They still own all our movies, right? And then they went into deflation. They went into the lost decade and the lost 2 decades. And they went, so it's the same kind of rise and fall that we normally that we have seen over the years with different economies that have come on board. They start off strong. They look like they're going to beat the United States, and then they kind of like fizzle out. But anyway, I hope you found this helpful. We have a shortened week. Happy Thanksgiving. I want to thank all you guys who watch Bulls versus Bears. Thank you for liking, subscribing, and sharing and commenting on what you think. You say, "Hey, Greg, you're full of BS," or "Hey, this is great." Let me know in the chat box. Let me know where you're actually watching from. I'd love to know how many people, how far my reach is around the world. Probably my mom over here in LA. But let me know in the comment section. Tell me where you're from. Okay. I love you guys. Take care. God bless. Peace and pips. Happy trading. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!